All right, let's get right into it. We're going to walk through a scenario that, while hypothetical, feels frighteningly real, a full-on blockade of the Strait of Hormuz. And believe me, this isn't just some regional issue. It's a global energy crisis in the making, and we're about to break down exactly how it all falls apart.
And it really all comes down to this one question. Seriously, think about it. What would actually happen if you woke up tomorrow and a fifth of the world's oil supply, the oil that travels by sea anyway, was just gone? The dominoes start falling fast, and they're big ones. So, first things first, let's zoom right into the epicenter, the choke point itself, and see what happens the moment traffic grinds to a halt.
To really get this, you have to see what normal looks like. On any given day, this little strip of water is one of the busiest shipping lanes on the entire planet. We're talking well over 100, sometimes up to 150 ships passing through every single day. It's truly the beating heart of the global energy system.
And then, bam, this happens. It goes from 150 ships a day to just a handful. Some days, maybe 2 ships squeak by. You have to understand, this isn't just a slowdown. It's a near total shutdown, a 98% drop. That artery has just been clamped completely shut.
And here's why that matters so much. We're talking about a waterway that handles more than 20% of all the oil shipped by sea. There are no real alternatives, no quick detours you can take. So what gets stuck here stays stuck, and the global market feels that pain instantly.
So that sudden stop sends immediate shockwaves out, and the very first place they hit is the shipping industry. The logistics, the costs, everything just gets thrown into total chaos.
And this chart, wow, it just perfectly captures the panic. This is the Baltic Dirty Tanker Index. It's basically how we measure the cost of chartering a tanker to move oil. And just look at that spike on the right. It's a vertical line. Shipping costs didn't just go up, they absolutely exploded.
To put a real number on that, check this out. The war risk insurance premium, that's just the extra cost to cover the danger of the trip, jumped by more than $250,000 per voyage for one ship. And you can bet that cost gets passed right on down the line. And this, right here, is how a shipping problem turns into a massive oil market crisis. Because, if you can't actually ship the oil out, eventually you have to stop pumping it out of the ground. This shows you exactly who's caught in the trap. You're talking about the heavy hitters of the Persian Gulf, Saudi Arabia, Iraq, the UAE, Kuwait. All of them are pumping millions of barrels of crude every single day with literally nowhere for it to go.
And that leads, inevitably, to this. They're forced to cut production. Iraq has to slash 1.5 million barrels a day. Saudi Arabia, an incredible 2.5 million. And the reason is brutally simple. Their storage tanks on land are filling up. They are physically running out of space to put the oil.
So, as you'd probably guess, the market's fear gauge just goes completely haywire. This is the OVX. Think of it as the VIX, but for crude oil, and it shot past 100. A number that high just screams absolute, unfiltered panic among traders. Now, to really put that into perspective, a volatility reading over 100 is, well, it's pretty much unheard of. It's only happened a couple of times in recent memory. During the absolute worst of the 2008 financial crisis and at the peak of the COVID market crash in March 2020. So yeah, we are in legendary territory here. So, you can see this is no longer just an oil story. This energy shock is now hammering the entire global economy. It's forcing central banks to rip up their playbooks and making everyone face the very real threat of runaway inflation.
Take a look at this. Before this whole mess started, the trend was clear. Central banks were getting ready to cut interest rates. See how those lines were heading down? Then look at the whiplash on the right side of the chart. That is the sound of central banks all over the world slamming on the brakes. Hard. Let me just break it down for you. It's a complete 180. The entire story for the global economy went from expecting interest rate cuts to now bracing for interest rate hikes, all because of the inflation shock coming from this one single choke point.
And this is happening everywhere you look. The European Central Bank, now expected to raise rates. The US Fed, they've had to delay and slash their planned cuts. Australia, Japan, they were already tightening, and this just pours gasoline on that fire. The entire global game plan has been rewritten in just a few weeks.
Now, when you have this much economic pain, it creates incredible political pressure, which means the next phase of this crisis isn't about oil tankers anymore. It's about diplomacy, it's about deadlines, and it's a frantic race to find a solution.
So where does the smart money think this is all going? This is fascinating. It's data from prediction markets, places where people are actually betting real money on what's going to happen. And what they're saying is that while a quick fix is unlikely, the chances of a deal go up dramatically over the next few months.
And here are the numbers. The market gives it only about a 22% shot of being resolved by the end of March. But fast forward to the end of June, the odds jump to around 70%. There's a clear expectation that by early summer, something has got to give.
And a huge reason for that timeline is politics, specifically the upcoming elections in the U.S. There is immense pressure on the current administration as voters start to really feel the pain of high fuel prices and a shaky economy.
I mean, it all boils down to a pretty simple calculation, right? Nothing focuses a politician's mind like an election. Sky-high prices at the pump and an economy that's stalling out, those are massive political problems. So there is a powerful incentive to get a deal done and get that oil flowing again long before people head to the polls in November.
And so that's where things stand. A crisis that started in one narrow strait of water has rippled through shipping, oil markets, global economic policy, and now it's all being driven by a political clock. It really leaves us all with a pretty sobering question to think about. This whole thing has shown us just how fast the system can break, which forces us to ask, how resilient are our global supply chains really?